Okay, good evening, good morning, good afternoon, wherever you are. Welcome back to the second part of the beginner's workshop, and we're going to be doing a platform rundown as well as a little bit of an introduction to technical analysis. Just checking if the audio is okay and if everything is good to go. Please do comment. And also, I actually forgot where you guys are from. I know this is a global webinar, so if you don't mind telling me where you guys are from, do type in on the chat so I know where you guys are from, and if you guys have any experience in trading, that'll be great if I would be able to know that. All right, just checking on the audio. I'm just waiting for a little bit of a response from you guys. If the audio is all right, we're gonna get started as soon as possible. Okay. All right, looks like there isn't any issue. So, as I mentioned, today we're going to be doing a platform rundown. So I hope you guys have your MT4 radio or at least downloaded the MT4 either on the desktop version or the mobile platform. And I'll touch in a little bit on candlestick charting as well. So that'll be a good start for everyone. Okay. All right. Before we begin, a little bit of a rundown on what we're going to be covering on tonight. The agenda tonight is understanding your equity, because you need to understand the difference between balance and equity, which is what we're going to be touching on a bit. And I've done some sample trades so we can take a look at how equity works. And I want to revisit margin and spread, because this was the question that was raised a lot yesterday at the end of the session in terms of what is a spread, what is a margin, how to read the spread, what is the cost of trading, right? And I'm going to be showing you how to buy and sell MT4 using MT4, and how to protect your position in MT4 using stop loss, what are the features of MT4, and we're going to run that through. And we'll wrap up with understanding candlestick, which is really basic. And why we're going to be using candlestick charts, or why is it popular, and I guess which time frame is suitable for you. That's going to be followed up with the Q&A session. I'll try to answer some questions as we go along, but most of the questions are going to be answered in the Q&A session. And before we begin, I didn't get the note, I guess, yesterday. There was a promo code for the for account opening by the end of this week. If you do open an account and deposit, the promo code is beginner NINT1 beginner INT1. I'll tell you the terms and conditions towards the end of the session. During the Q&A session, we'll touch base on that again. All right, so good evening, good morning, good afternoon, wherever you guys from. Okay. So let's talk about CFD trading costs. We did mention about CFDs, but we didn't really touch on what is the trading cost. I briefly mentioned that if you do a physical currency exchange, you're going to get charged the spread and the commission. Well, in OctaFX, it's basically just a spread. That's also what we call the trading cost to open a position. So when you open a position, the difference between the buy and the sell, that will be your cost of trading. And calculating your profit and loss is basically done automatically on the trading platform. You can see that later on. But as a note, your total profit or loss would depend on the number of trades that you have, the size of the position that you have. That gets summed up, average, and then that will be your total. Realized profit and loss, which will go through your balance. That will be the sum of all your profit and loss, minus your trading cost, which is built in when you open a position. So when you open a position, it'll be minus. It's not going to be automatically a plus. Floating profit and loss is basically unrealized profit. It's still a running trade for you guys, and that's basically all the sum of your open positions, whether it's profitable or not profitable. Okay, so just briefly touching base on this, which is something that we've seen yesterday. Some of you guys are new, some of you guys didn't see this yesterday, but basically this is what a currency pair is. What's in front is called a base currency, and then we have the counter currency, and that would be the AUD/USD, or a quote. So some people will call it a quote currency, which is the base currency itself, right? And there's going to be a difference between the bid and the ask, and that would be the spread, and that is how we'll calculate the pip or price in points. In this case, if you buy, then you'll be starting with a -2 pip because the ask is at 39, the buy is at 37. So how do you read this quote? It'll be 1 AUD at 0.8939. So we're always going to look at the ask price, not the bid price. Some people do look at the bid price, but I prefer looking at the ask price because I know that's the more expensive one to pay. Okay. All right, so let's talk equity, and we're going to touch this a little bit later on, but I just want to clarify a few things. Equity is not your balance. Equity is basically the amount of funds available in your account, but it's not your balance because it's not really final yet. Once you close the position, then it'll become a balance, but equity is not your balance. Equity is basically your balance plus any open profit or losses of any open positions. Okay, so when there are no positions, then your balance will become your equity, and I'll show you that in a minute. But just be clear here, balance and equity is different. Equity is basically your balance plus unrealized profit and loss. Once you realize those profit and loss, then it'll become equals to your balance. Okay. So as I mentioned, we're going to be touching on a little bit about margin and leverage. Just an example again, with 400 to 1 leverage to open a position of, let's say, $1 million, you will need to have 2,500 set aside, and that is what we call margin required. This is for your own protection because we are going to be discussing a little bit about what margin call is, how margin call is calculated, how you're going to get stopped out of the trade if you don't have enough funds in your trading account. All right, so if you open a $1 million position, you'll need a starting capital of more than 2,500, like 5,000 for example. That would cut into 50% of your margin anyway, but this is just an example on how leverage work and what margin is. Okay, so if you use this correctly, you can help lower the minimum capital requirement to get started in the market. And this is also from the previous webinar slide. Just a reminder that it is a double-edged sword. It will amplify your gains. It will also amplify your losses. And in this example there, if you have an unleveraged position of $1 million, then any gains that you have of 100 pip movement or 1 cent, it's 11,363, which is only 0.01. However, if you do use leverage and you start with a capital of 5,000, the return would be 11,363, 227% of your position. But if you're wrong, that would be double your starting capital. So be very careful. We did talk about the negative protection balance that OctaFX was offering yesterday, so I'm not going to cover that again today. But just so you know, in Forex, you normally do not lose more than your initial investment due to margin call and margin requirement. You'll get a warning before it happens. Okay, so let's touch on margin calls. What is actually margin calls? You'll actually get a margin call when your available margin hits 25%, and you'll receive a margin call warning, and a stopped out will be triggered if the margin level goes below 15%. We'll take a look at the difference. We'll take a look at how you read the margins later on, but there are several ways to avoid margin calls. Number one is obviously to plan a trade, managing your risks before entering a trade, so you know how much you're risking. You're not cutting into the margins. You're not planning to get a margin call. All right, you don't want to get a margin call. If you get a margin call, you basically got burned. Your account is pretty much in trouble, and you need to either top up your position or whatever not. Okay, so how do we avoid this? Apart from planning the position size when you enter a trade, that would be to reduce your position size. Let's say if you have 10 lots running, you can cut down 5 lots to free up 5 lots of free margin. You can exit some open positions to free up this margin. Refer to the required margin that we discussed earlier just now. Or the last resort is you can deposit more funds to maintain your margin level and keep your position running. But why would you want to keep losing position running? That's the biggest question, because you only get margin call if you have a losing position that's against you and hits your margin to 25%. Okay, to calculate margin level, it's basically your equity, which we discussed earlier, divided by the margin left, multiplied by 100. That's your margin level. Okay. All right. So this is a quick leverage on what margin is and the required margin comparison. To open a position size of 10,000 on a 100 to 1 leverage, you are required to have $100 set aside. 200 to 1, you are required to set $50 aside. 300 to 1, you are setting aside $33.33. 400 to 1, you're setting aside $25. Okay, those are just a quick comparison of what the margin requirement is and how do you calculate it. Okay, so we are going to jump straight into MT4. So make sure you have downloaded MT4 on PC or Android and iOS. It's not available on Mac unless you run virtual OS like using Parallels or Bootcamp on Mac. Then you'll be able to run. You need to run Windows to run MT4. Tonight we'll be going through the full PC version of the MT4, which is the desktop version. But the logic to open and close, buy and sell is basically applicable on the mobile platforms as well. I just prefer desktop version because it's for charting purposes. Okay, so we can take a look at what's going on in the market. We read through technical analysis using charts. It's just a lot easier to use all of the indicators out there, and we also have the features of adding and downloading custom indicators, as well as expert advices capability, which is your automated trading system. Okay, I seriously just like the desktop version. And if you are going to take trading seriously, I would recommend that you go for the desktop version because there's a lot more information that you can see there on the desktop version compared to the mobile version. It's just that you can see a lot more things at the same time. Mobile application wins in terms of convenience and quick accessibility, and that's pretty much it. Okay, so I'm going to switch to MT4. This is an OctaFX MT4. We're going to start with the layout. When you start with an MT4, it doesn't look like this. Normally it looks more like this, or it starts with 4 charts. But there are a couple of things here. For example, window here, I can cascade if I want to. That way I can figure it out. But I prefer either tiling the windows to see everything at the same time. If you have 4 and you have a big screen or a higher resolution screen, then tiling is the best option. Let's say if you have a 4K screen or an 8K screen, you can fit in a lot more into your monitor. Okay. You can tile it. You can tile this vertically, but I just don't see the point here because once you start having a lot of these things open here, you're not gonna see a lot of things. So what do? I normally just use one chart like that, and I navigate through the different charts on the tab down here. Okay, let me just see if I can zoom that in for you. All right, you get a bit of a tab down there. All right, you can just click on those, whichever one you want. For example, if I want to look at the pound, I can just click on that. Okay, dollar yen over there. But here's the main part of the show here, which is basically your symbols. Now these symbols here, it's initially it's not going to show a lot of things in there. So what you want to do is right click on it. You want to right click on it, and then you want to go to symbols, or you can use a shortcut on the keyboard, Control U, and then you can add all the different currencies. If it's shown as yellow like that, that means it's already there on your symbols. If it's highlighted gray, that means it's not added yet. For example, the Euro South African Rand, I can double click on that to make it yellow, then it's going to be added into my symbol list. I like to trade pound AUD. I'll double click that. Pound New Zealand, I don't like that. Okay, so that's how you add it. Initially, metals are not added as well, so you need to add that in there. Make sure it's yellow. If it's yellow, that means it's on your list. That way you can access it quickly. Indices as well, it's not added here, so I'm going to show you how to add it. I'm going to add Aussie 200 here. I'm just going to double click it. I'm gonna show German DAX 30, double click it, Nasdaq 100, US 30. I'm just double clicking it. The crypto choices, we have the Bitcoin Cash. I'll go for Bitcoin, Ethereum, Litecoin, and Ripple. Okay. Energy, we have the Brent, got natural gas, and the XCI, which is the NYMEX. I'll just double click XBR and NYMEX. Once I'm done with that, I'll close it, and it should appear on your symbol list over there. Okay. Just to give you a heads up, I'm gonna hide my camera for a little bit so you can see what I'm gonna be talking about in terms of balances, margin, and equity and stuff like that. Okay, so just give me 1 second. Just gonna hide myself in there. All right, this is how, if you don't have the terminal window, which is over here, it says terminal there with the balance, equity, and whatnot. Let's say I make it disappear, and you want to see those windows. You go to View, okay, and you can go and select Terminal, which is Control T. Alt T is a different shortcut, which I'll show you in a minute. So you can go to Terminal. In Terminal, you have your trade, you got your exposure. You can look at how big of an exposure you have. If you want to resize this, you can just highlight and hover there until you see that signs there, up and down arrow, and then you can just resize it up. But I like how this exposure screen looks like. It'll tell me how much I'm exposed to, how much of a short position that I have here, how much of a losing trade that I have. For example, the pound there, I'm losing a little bit there. Okay, and you can take a look at the long positions that I have. Typically I'm long euro just a little bit. Much bigger on the dollar there. Account history is whatever you've done. I'll come back to account history in a minute. You can read on news releases that came out that's important. All you need to do is just double click it. It'll open up the news. You can read it on there if you want, so you don't actually have to go to anywhere else. I can look at news on the Aussie USD, for example, what happened there, what's going on. We take a look at the CPI data that came out, which should be coming out in about 10 minutes time. Okay, that's US CPI data to watch out for in 10 minutes time. So we're going to see a lot of action tonight. Alerts are conditions that you can set on your chart, which I'll go into in a little bit. Mailbox, if you get your emails or notifications from OctaFX. Market, articles, right? You can take a look at what to it's basically not really market related. It's more on coding related. Code base is where you can download your custom indicator or expert advisors. Experts are basically just a list of things that's been going on. Journal is your trading journal. For example, I click an open order to buy and sell earlier, and it shows up here on your journal. All right, so let's go back to just to clarify a few things right now. I've got two running trades right now on the Euro USD and the Pound USD. Look at my balance here. It stays at 5,000 because that's what my account starts with. My equity is 5,040 because I have a profit of 40 over there. Okay. Now, my margin is what I use. So that's 5,000 minus 512. The available free margin that I have is basically my equity minus the margin, which is 4,527. My margin level is at 983.78, which means I'm managing my trade really well. I have a 5,000 account, and I'm only trading small positions. I'm only trading one lots. By the way, one lots it's basically just a mini lot, which is a $10,000 position, and not too bad for a trade that I triggered 15 minutes before we start here. But overall, that's basically what you need to know in terms of your balance. We'll come back to this in a second. All right, let's say we want to open up a new chart. For example, the Pound USD. You can do a few things. You can double click it. Double click it to sell, buy and sell. But I want to open a chart, so I'm gonna right click it. I'm gonna go chart window, and that's gonna open up a new chart for me. Any open positions that I have there is going to be highlighted no matter whatever chart that I have. I already have a couple of pound chart. I've got one here that's already open and it's showing me the sell button as well as the buy button up there, as well as the sell position that I have. And this is what you're going to start with. It's basically a mess, right? I mean, you're going to get a headache looking at this thing. It's all full of grid. It's all black and green, unless you like black and green. Well, how do I get rid of the grid? Well, you can right click on it. You can go to grid, just tick that off. It'll give you a much better view. Okay, or you can go to properties and you can change the color scheme if you want. You can have yellow on black, green on black, black on white, which is what my preference is, black on white, but you can change it around whatever you want. So I can make it, if I like my background to be orange, for example, my foreground, which is where the numbers are, to be, say, blue, I can do that. There we go. Okay, I don't have the grid, but if you do want to change the color of the grid, feel free to do so. So I can change it like that and it'll look really painful to my eyes. Okay, so I'm gonna go back to just a black and white and it'll just give me a better understanding. When you start, what you're gonna look at is a bar chart, and your chart selection is up here. You can change it to bar chart. If you use the bar charts, feel free to use bar charts. A lot of people are more commonly using candlesticks right now, which is what we're gonna be discussing. So change it up there, or you can use line chart if you want. Line chart is basically one single moving average. We'll talk about that in future webinars when we come to technical analysis. But line charts is useful if you want to look at the general direction of the market. Okay, this is candlesticks, so we're gonna put it into candlestick for now. You can zoom in by adding the plus button or the minus button, or the plus and minus on your keyboard, as if I'm typing it right now. You can't see my keyboard, but there we go. Okay. This is arrange window as non-overlapping tiles, which is basically the same as how we tile windows over here. Okay, that's the same thing. The green button here is basically, so if I'm looking at the market back, earlier in February, whatever, and I need to quickly back into the current price market, I'll just click on the green button here. Okay, just to zoom in a little bit, that's the button over there. It's green. It'll shift me back to the current price. And the red button next to it is basically just a chart shift, which is useful in some indicators like Ichimoku Kinko Hyo. Otherwise, some people just like to see what's going to happen in the future. Up there, you'll see a small triangle on the top right corner there. That's basically to adjust how much of a shift you want. You can have it there just for a little bit of a shift, or you can shift it all the way back like so, half the screen there. Or I can have it just right around there. Okay. All right. So this is your indicator list. You can click on that if you want to, but you need to go. You can go take a look at the navigator window over here, just underneath the quote. This should be open, and under accounts that would be an indicator tab. You can click on that. For example, I want to add moving average. Let me see where the moving average is. Okay, moving average. I can either double click it, just there. I can either double click it and it'll show me what settings I want to put in. For example, I want 100 simple moving average. I can do that, or I can click and drag and drop it onto the chart, and I want to have 200 and I want to have a different color on it. I can change it over here. I want to make it a thicker line as well, and my calculation is simple. You can change it to exponential, smooth it, linear, weighted, or simple, exponential, smooth it, linear, weighted. Okay, those are your options. I'm gonna stick with simple for now. We're just gonna leave it as simple. Okay. So there we go. We have indicators. If you want to add other indicators, like an oscillator, for example, I want to use the relative strength index. By the way, you can adjust this if you want. You can get more information there. Relative strength index, I can just double click it or just drag it there. Period 14, I'm happy with that. It's going to load up. Now, if I don't want this indicator or accidentally put in an indicator, you can hover over that where it says relative strength index 14. I can then right click on it and delete the indicator, or I can right click on the chart and go to the indicator list, and it's going to show me right over there what I have. I have 2 moving averages and a relative strength index. I can just click on that and delete. It's going to be the same thing. Okay. Next to that, we have your periods, which is over there. We have a shortcut of that over here, so it's a shortcut there. If you don't have this, then you'll need to go over there, but I have it ready. Currently, I'm on the hourly time frame, so you can look at that. It's H1, and I'm on H1 as well over there. I can quickly go into the daily chart if I want to, just by clicking D1, weekly chart, monthly chart, 1 minute chart, 5 minute chart, 50 minute charts, 30 minute chart, and I'm back to the hourly chart again. Alright, here are the tools that we have right now. I have the arrow running around. You can have it into a crosshair if you want. You can draw a vertical line over there. Where some of the options here are not available, all you need to do is right click on any of those icons here and go to customize, and you can insert a few more. Like if you want to use Gann fan, then you can insert Gann fan. You want to use Fibonacci fan, then I can insert Fibonacci fan, and so forth. If you want to remove something, I don't want trend line by angle, I'm just going to remove it. That's going to help me out there. I don't use arrows a lot, I'm going to remove that as well, and that's done. Okay, so once you're all set up with this, let's say you don't want to keep doing the same thing over and over again. For example, if I run a new dollar Swiss chart and I open it up, it'll look like that again, right? So it's really killing me. I want to have the moving average 100 and 200 immediately when I open the chart. I just want to have it quickly. I want to have it in white and black and a candlestick. All I need to do is right click on it and go to template. I can save a template, and I'm gonna write it out as test 1. I'm gonna save it. I'm gonna go over here. I'm gonna right click again. I can go to template, and I can load template. All right, test 1, and boom, we have that there, just as we wanted, just like how what the pound looks like. So there we go. All right. So that's that. That's basically the charting. That's some of the tools here. If you want, you can take a look at. Actually, there's one thing I want to show you. There's data window. If I don't use the navigator or the terminal, I can just click on that under view, and it's gonna hide my navigator for me. Typically, if I'm all set up with the templates, I don't really use the navigator. I can just hide it like that. But in this case, we're gonna show you the navigator. But there's one thing that a lot of people actually don't use is the data window. It actually helps out. All you need to do, what it does is it opens up a new data window here. It'll tell you the date, the time on where your cursor is. For example, if I highlight on the current candle here on the hourly time frame, I can take a look at the value of the moving average. Where is it at? Okay, the volume of that current period, and the time and the date. So this is actually useful if you want to be more specific in what you're looking at. Okay, typically we don't use it, but in case you need to use it, it's under view, data window. Okay, so I'm gonna click that off. Okay, now I was in a good trade just now. I was up 40. Now I'm -3 and 2. Right now, let's say if we have a position that's open right now, I have a position that's open right now over there, right? And seems to be profitable right now, and I want to close my profit. I'm actually at about 26 right now. So I look at the Euro USD that I have here, and I want to immediately close it. I'll teach you guys how to open a trade soon, but I want to close this right now. All I need to do is go to the X button and just close. And I'll be closing by market. Look at how fast the execution speed is, and that's it. It's already closed. All right, I can go to the pound and I want to close it by market, and that's it. It's all done. I don't have any running positions. Now, if you take a look at the balance here, it's now realized then my balance is equal to my equity, which is 5,018. That means I just earned 18 bucks in what, less than half an hour time. Okay, pretty fun, right? So let's show you how to open a trade. There are a couple of ways to open a trade. If you don't have a chart open, and for example you get people saying, all right, let's go short the euro pound because the euro pound looks like it's going to go down, or you can double click on the euro pound and you can click on sell by market. You can also adjust your stop losses if you want. You can take a look at the bid and the ask price as well. So I want to have price, let's say, with a stop loss of 0.87. Sorry, 0.87. Okay, 0.87. I want to have that at 0.7. Remember, I want to be selling this, so I want to take profit anywhere below 86, 85. I'll go 85, and I'm gonna sell by market. Okay, so I'm not gonna wait. I can sell by market. It's successful. It's already open. I've got my stop loss. I got my take profit. If you want to see what's going on in the chart, then let's open the chart window for euro pound, and let's load a template, which is here. I'm going to test one, and you'll be able to see my positions there. I've got my stop loss set up. I've got my take profit here set up as well. Okay, so that's it. And once the stop loss is hit, I'll be close with a negative. That means I'm protecting my position, but that's how much I'm willing to risk. I got my take profit here. If it reaches my take profit, it'll automatically close it, even though you're not in front of the computer as well. So let's open up a few more trades with a different method here. Let's say the pound here. All right, I was short the pound just now. I'm looking at the pound here. Looks like the pound's gonna go up, right? We don't have that one-click button setting. You can right-click and do the one-click trading option. You can highlight it. You can do the one-click option there, or you can use a shortcut Alt-T. Okay. Depth of market, by the way, it'll tell you what the market is in terms of the volume and the range on whatever not. But it's not commonly used in Forex. It's more on the equity side, but it's there if you want to. But let's activate one-click trading before I miss out. I want to adjust my position here. Or let's say I want to open up 5 lots here. I just type in 5 and I click on buy. Okay. I made a mistake just now. There was actually a term and condition. If you click OK, you can automatically buy, but I'm just going to do that right now just to give you an example. I can buy here right now. Okay, so in terms of adjusting stop losses, I want to have my take profit level, right? What do? I just drag to modify. If you highlight the green open position button where it says buy 5, which is 5 lots, that's the option for drag to modify. I can just click on it, hold, and drag it, and it'll tell me how many pips there is available for me to take. I want to take my profit right around there. That's fine. I'll just click on modify. It'll show up as that. I'll click on OK. I want to set my stop loss. I can again drag it down here, and I want to have my stop loss here. I'll just click on OK to modify. I can do that as well. Okay. Now let's say you have a running market here. The easiest way is basically just to drag this around. It'll just modify it for you. But if you are someone that's really particular about this and you want to see what's going on, you can just modify, right click on the order itself, modify or delete order. You can change your stop loss manually by adding a number in there. So for example, I want to move this back down to 1.37050. I'm going to modify it. That's going to adjust it down there again. All right. That's pretty much a good rundown there in terms of how to open a position or how to close a position. There's an X button there. If you don't want to use the X button, you can also right click on that and you can just manually close the order. I'm just going to close it by market as well, which is good. I've got a negative 46. I don't like this trade. I'm going to close it as well. But my equity just in a short few minutes just went up 5,121, equity of 5,121, which was starting at 5,000 at the beginning of the webinar. So that's how easy it is to trade, provided obviously you know what to look at and how to do that. Okay. Looks like pound is still going up, so I'm just gonna add more position into that. I'm just gonna buy my market. There we go. And if I want to add more position up here, I can do a trading. I can do a buy stop if I want to add more long position up there, and I can place it at 1.37685. Once price goes up there, it's gonna create a buy for order for me. And I want to change this. I don't want to have this order. I can delete it. Okay, so I'm going to delete that order. That's how you do it. Just right click on it. And if I want to have a trading stop, for example, for every 20 points or 20 pips that it goes up, I want to have my stop loss moved up. Let's say I'm going to have it at 50 points. I can have it at 50 points, but first of all, you'd obviously need a stop loss. I'm going to set one here. Okay. I'm going to click OK. I have my trading stop at 50 points. So every time I move 50 points, my stop loss is going to move, or stop loss is going to get created. All right. So I'm up 135, 165. I'm just going to close it off right now because it looks profitable for me. And not bragging, but my account just went up $266 in, I don't know, less than 2 minutes, 3 minutes. But that's how we look at things. Yeah, or you can have that option here where you can create a new order if you want. You can sell by market, buy by market. You have a different type there. Pending order is what we have: the buy limit or the sell stop, the buy stop, and the sell stop. Okay, so I can change that. I can do that, but that's more advanced. We're going to talk about that more in risk management. But looks like pound is still on fire here. Still just going to rage up. Okay, so that's the platform rundown. It's simple, it's easy to use. Okay, and I'm kind of liking how the pound is going right now. All right, I'll just stop here for a little bit before we go into candlesticks. Any questions that we have on the platform, that'll be great if you can let me know. I'm gonna take a look at where people are from. India, Malaysia, Nigeria, Pakistan. I didn't get a promo code in yesterday's session. Yeah, I wasn't notified about the promo code. I'm really sorry about that. But I gave the promo code just now earlier, and we're gonna provide that again at the end of it. Okay, promo code. Yes, we'll do that at the end of the session. Can we say that trading is like a bet? No. Okay, that's a straight no from me. One of a few reasons is because to me, I can calculate it. So it's more of a calculated risk. I know how much I'm risking, how much I'm going to be profiting. You do have a chance to win or lose, but you don't say anything, and bet is strictly not allowed in Islam, so Muslim can't do this trading. Well, we do have Islamic account, which is a Sharia account if you want, but if you believe that this is betting and it's not for you, then feel free. No one is here to force you to trade. Okay, so that's your own opinion over there. To me, it's a calculated risk. It's not a bet. But if you do binary currencies, that to me is a bet. That's a flip of a coin, 50-50. Whether you think the market is going to go up or down without any particular analysis, I don't think that's a good risk management there. Okay, there's a lot that's going to get involved in trading. Obviously, it's not just a bet, it's a calculated risk because we plan our trades ahead of things. We know where we get out, we know where we want to get in, but we basically know whether it's worth the risk of our investment. That would be my best answer to you. There we go. Team OctaFX already answered that for me, so I'm gonna look through this. All right, if you're new to this and you don't really understand anything, that's fine. We're running through a platform rundown, but if you wanna visit the yesterday session, then the link is up ahead on the chat there if you want, or you can go to the OctaFX Forex broker channel and find out about the session that was run yesterday. Okay, Account questions that will be answered by OctaFX team. Lagos, Nigeria. That's awesome. Mumbai. Hello to Mumbai. Namaste. As a professional and a mentor, can you drop some of your analysis that works fine? I do guide people from beginner level all the way to the more advanced level. We've been doing that through the Indonesian channel. We're likely going to be doing that hopefully in the English channel in the future. We just wrapped up the more advanced Japanese charting just last week. So I'll take a look at things right now. You just talk only for a webinar. My experience very bad in the second time. Well, I don't know. I mean, I just made 266 bucks. Obviously, I'm not telling you that you're gonna make 266 bucks because I have nearly 20 years of experience here. I'm just encouraging you that if you learn, you focus on, and you understand what's going on, you'll be able to perform how to do quick trades like that, even though I do have some losing trades as well, which is going back to what I'm going to talk about. I'm going to hide my camera a little bit here. The account history. This is basically what the trades that we have done today. Okay. So we started out with 5,000. I have $17. I have $1 profit. I've got negative 46. I have 150, 145, which runs up. If you sum it all up, it'll be 5,266. Mr. Kim Woon from Malaysia. That's really awesome. Okay. Yeah, so this is your account history. Your trade history is going to be here. Those that have been following me through some of my webinars, I do mention a lot about trading journals. This is how you're going to keep track of your trade, what size position that you have, when did you get in. There's a time allocation over there, the size of it, whether you buy or you sell, the size, what currency pair, what price you get in, okay, your stop losses if you have any, your take profit level, time you get out, okay, at what price, any swap, normally no swaps, and then that would be your profit level as well. How do we search for a trade that has to be buy or sell to trade? Okay, that's a little bit more advanced. This is for beginners, so we're just doing a platform rundown. That's more on, look, just hang around the channel. You're gonna find out that we are gonna be doing a lot of this webinar in terms of how to analyze the market. Okay, stream should be on again. Any questions on MT4? Otherwise, we're gonna get moving because... Are we up? Are we back on? Just a quick audio check on everyone. Yeah, it looks like it's back on. Okay, so I don't see any questions on the MT4. I think everyone's familiar with the platform. I believe it is an old platform, so... Yes, we are going to talk about when to enter the market and whatnot later on. Obviously not in this video because it's for beginners. To be able to get into the market, you need to have a good understanding of technical analysis or fundamental analysis. So I'm going to show you in a few minutes on how to start on looking at candlesticks. It's on the channel for yesterday's recording and today's recording. It's gonna be there ready for you after the stream today. So yeah, let's go back to the slides since we don't have any questions on the MT4 platform. Okay, so let's go straight into candlestick. We just saw what candlestick is. I want to explain to you a little bit about candlestick and why we're going to be using candlestick. This is a charting method that's commonly used in Japan and Asia. Specifically 100%, I can guarantee you it's used in Japan. It is from Japan. Okay, so in the last decade or so, it has actually replaced bar chart as the main charting type. Bar chart, as we remember, when we start a new chart, it shows up that thin stick line. Those are bar charts. Candlestick is basically just like bar charts, but just a little bit more beefier. Okay, so 80% of the retail traders unfortunately uses candlestick without understanding what it's actually for, because to me candlestick is not just a chart, it's actually an indicator. And The reason why a lot of people are switching to candlesticks, and they switch to candlesticks easy, because on the western side of the world, they normally use the bar charts. Now they're using candlestick charts. It's easy to convert from bar to candlestick because both of them are what we call the OHLC chart, which is the open, high, low, and close chart. Okay, so it'll show you when the open is, the close, the high, and the low of a period. Now, the body and the wicks will form what a candlestick pattern is. I'll show you in a minute. This is again overlooked by most traders even when using candlestick chart, because it identifies the market sentiment and demand that's actually going on. How do I make those trades just now? I don't have any indicators at all, and I wasn't making a blind buy and sell. I was actually looking at the candlestick patterns there to actually trigger those buy and sell. And that's just without using anything. Imagine if you learn all the other technical analysis, you know, once you get to the more advanced level, then everything will come into coming together, and it'll be nice. If you Shikar, I'll give you an advice here. Don't expect an instant return on trading, because trading is not something simple that you delve in and you just learn one thing and you'll be good at it. It's not like that. There's a lot of things involved in it. As I always say, 80% is all in your head. It's all psychological and risk management. 10% is technical analysis, 10% is fundamental analysis. Okay, so why people use candlestick is because it's easy to identify the market sentiment and demand, very easy to understand, and it will provide you with early detection of trend changes. This is what a candlestick look like. We just show it to you. I have two here, one in blue, one in red. I just color it red and blue. Otherwise it's just black and white typically. Okay, I prefer using a hollow candle, but just for reference sake, if we have an open, we have a rising bar here. We basically have the end of the wick here as the low. The market opens here, it went down here, it goes all the way up there, and then it closes there. Okay, so those are your what we call the anatomy of a candlestick. So we have oops. Okay, so we have the low. Market opens here, it drops down there, it goes all the way up there to create a high, and then it closes up top. Okay, the next session is it opens up there, it went all the way high up there, market got pushed down, so we know the sentiment has changed. It closes down there after managing to create a new low over there. Okay, so this is candlesticks by nature. Now, the main purpose of a candlestick chart is basically for candlestick patterns recognition. Okay, how do I make those instant trades just now? By looking at candlestick patterns, which we're not going to really delve into much in this beginner webinar, because it's going to confuse you and scare you away. I see some people from Indonesia here that has been following my classes, and they can attest to it. It's not as easy as you think it is. It does take practice, it does take learning, it does take patience. It does take a strong mentality to be able to get through a lot of this in the future. Okay, but back to candlestick patterns. The main purpose of candlestick chart is to look at those patterns. Most commonly used patterns are basically reversal patterns. That's why I was able to identify when the market is going to turn around just now. Reversal pattern basically implies a likelihood of change in trend, but not a complete trend reversal. Pattern names are also easy to remember. The Japanese names them very easily, so you can actually take a look at this later on. But here are your popular patterns. We have the bullish and bearish engulfing. We have the bullish and bearish piercing. We have the hammer, hangman patterns. We got the doji. I'm going to touch on a little bit about morning and evening star, although those are 3 candle patterns, which is a little bit more advanced, but we'll touch on those tonight. Okay, so let's take a look at engulfing. We basically have bullish and bearish engulfing patterns. Okay, these are the rules. The second candle needs to fully engulf the previous candle's body, and that's that, you know. That's just rule 1. Let me change my pointer for a bit here to laser. Okay, so we need this this candle here, the second one, to fully cover the first candle over here. All right, so we need this to fully engulf it. It can be both a reversal pattern or a continuation pattern. It can come up at the end of a trend, in the middle of the trend. Then the opposite of that, we have the bearish engulfing, where the market goes up, and then the second bar fully engulfs the first bar, and that's what we call engulfing patterns. So it's very simple to identify, very simple to understand. Just by looking at it, it says engulfing. It means to cover everything up. Okay. Next, we have the piercing. The piercing candle has to close at least 50% of the previous candle's body, like this one over here. Again, this can be a reversal and continuation pattern. So the market could be going up, and bullish piercing appears in the middle of it, and it'll continue to go up, or the market goes up, and then we have the bearish piercing, which is also another thing in Forex, which is a dot clock cover. We're going to touch on that a little bit. That would be a reversal pattern for this. Okay. So if you take a look at the second candle here, it doesn't fully engulf the first one, but it covers more than 50% of the previous candle. Just like this one here, it's close to about 60% of the previous candle. 50% is just right about there. Okay, so these are piercing candles. They're not as strong a signal as the engulfing. The engulfing means that the sentiment and demand has completely shifted, that the buyers and sellers has actually taken control of the market. The piercing patterns are indication that there are potential changes that's happening in the market. That's something that we need to be careful about, but not really as strong as the engulfing patterns. Okay, this candlestick patterns, by the way, if you are gonna ask this, I'm gonna answer you beforehand. How reliable is this? Basically, you cannot use candlestick patterns by itself. You need other things like a momentum indicator, like an oscillator, like the RSI that I showed earlier, or maybe moving averages to further back up your evidence on whether or not the market's going to change. Okay. All right. Hammer patterns in an uptrend. So we want to see this in an uptrend. When it's showing up in an uptrend, it's named really negatively, like it's either a hanging man where it shows up like that, like it looks like a head being hang up there, or a shooting star. This is on a market that goes up, and you see this up at the top. These are most definitely reversal patterns. The body of the candle can be bullish or bearish. It doesn't matter as long as it looks like that. So when the market is moving up and this shows up, this is reversal patterns. We call it hanging man and shooting star. Obviously, it has a negative connotation to that. A hanging man, someone getting hanged. A shooting star, a star falling down to the earth. So that will give you an indication of what the market is going to do. Okay. Now, if this shows up, the same pattern shows up when the market is in a downtrend, then we call this a hammer or a reverse hammer. It means the market managed to go all the way down here, and then buyers managed to pick it up and push it up higher. Ideally, if it's a bullish candle, then it'll give you a strong indication, but again, the color doesn't matter. It can appear in both bullish or bearish candle, so it's just a matter of where it appears. It'll have a different name for it. If it's in an uptrend, it's negative. If it's in a downtrend, then it's positive. It means a buy signal. This is a sell signal. Okay. All right. Dot clock cover. It's very similar to a piercing, bearish piercing, but notice one thing here. There's actually a gap over there. So I'm gonna again change it to my magnifier here. Okay, so we'll see that there's actually a gap between the close of one period to the next, and that's the one thing that we need to look for, the gap over there in between the candles. Normally there is a gap, but in Forex, because it's running 24 hours a day, sometimes we don't see a gap. So it's okay, it's considerable if it opens and closes at the same level. That's completely fine. This is one of the strongest reversal patterns, so burn this into your memory, because if you see this, that means you know that's a strong sell coming on in the market. Okay, so Dojis. Dojis are candles without bodies. You're gonna see this a lot. It basically indicates indecision in the market. Market doesn't know what to do with it. There's no bodies at all. It opens and closes at the same level. However, if you take a look at the wick on like this one here, the wick is long to the upside. That means there's a lot of selling pressure because market opens here, it goes all the way up, sellers manage to push it all the way down to where it opens, and it closes at the same level. The opposite is true for this one here. It opens here, goes all the way down, buyers pick it up and close it up there. So if you take a look at Dojis, you know, this one here is neutral because if you take a look at the length of the wick, it's pretty much about the same. This one here, the last one over there, that's a positive one because it's really the direction of the wick or the tail or whatever you want to call it. Okay, it's showing you the sentiment or the demand of the market. That's Doji. Okay, you're gonna see a lot of Dojis here. Dojis are part of the some of other patterns as well, the more advanced patterns like the morning and evening star that we are gonna cover now. This is a bullish reversal pattern. It only occurs in a downtrend. The first candle has to be a bearish candle. The second candle can be a doji that we just discussed or a hammer, like in this example over here. It is a hammer if you take a look at it. It can be bullish or bearish candle for the second one. The third candle has to be bullish and closes at least 50% of the first candle. Now, if you take a look at this one here, this is basically a combination of a doji, a hammer. You know, you slip in a doji and a hammer in between an engulfing or a piercing pattern, then you get a morning star. Okay, so the rules are set. There are rules to follow. You just cannot randomly look at this and say, oh, this is a morning star. No, the first candle has to be bearish. The second candle has to be a doji or hammer. The longer the tail is, then the greater the sentiment is for a potential change, because these are reversal patterns. It only appear when the market is about to reverse. The third candle is bullish and closes at least 50% of the first candle's body. Okay, so we take a look at this one here. This closes at least more than 50% of the first one there. Okay, evening star is the opposite. I'm going to show you the example here with the doji up there. It is a bearish reversal pattern. I'm going to show you some charts to give you an example of what's going on here in a minute. It only occurs in an uptrend. Just now it was a downtrend. This is only in an uptrend. If this shows up in an uptrend, then we call this an evening star. One is a morning star, which is good. We start the day in the morning. We don't start the day in the evening, unless some of you guys work the night shift. But normally people start the day during the morning and then ends up winding up at night. That's why we got the evening star and the morning star. Evening star is bearish reversal pattern. It only occurs in an uptrend. First candle has to be bullish. The second candle has to be a doji or hammer. It can be a bullish or bearish candle. Same rule here, just in reverse. The third candle is bearish and closes at least 50% of the first candle's body. All right. So I'm just gonna hide my camera here for a bit so you can take a look at what's going on here. If you take a look at the chart over there, that's basically bearish engulfing, because we have a candle that drops down and engulf the first candle. That's your first sign over there. It doesn't immediately, it drop, but it does pick up again. And the second one is bearish piercing. So we have bearish engulfing, bearish piercing, and then the market obviously falls all the way down. And at the bottom there, before it reverses, doji starts appearing, hammer pattern starts appearing. Okay, that's giving you an indication of potential changes in the market. Market picks up. Okay, the second one does the same thing. It does a bullish engulfing again at technically it's a short-term downtrend there, and the market picks up. Okay, if you're wondering what's on the background here, what are this blue thing? Those are the Ichimoku cloud, and what are this thing? Those are the stochastic oscillator. So as I said, candlesticks cannot be used alone. It has to be combined with a couple of other indicators as well. But it does give you a good indication. This is on the US 30, which is the Dow Jones Industrial Average, by the way, if you guys don't know that. Okay, next is how support and resistance works with candlesticks. We're going to touch on key levels tomorrow when we talk about the a little bit more about the psychology and the risk management side of things. But basically this is previous support. You can see the price bounces off there. Price bounces off there. You can take a look at the chart there, and then we have bearish engulfing. We can use this two previous support as our target level if you want, so you know that's where you get out, because we already draw a support over there. That works in the past, price bounces off that, and obviously that's going to happen again. So what we're looking at is actually repetition in the market, patterns in the market. Whatever happened in the past is likely going to happen again in the future, so keep that in mind. All right, trend lines. We are going to talk about trend lines. Hopefully we do have time to talk about trend lines today, but if not, then we're going to cover this tomorrow. But trend lines, rejections, and candlesticks, they're basically working about the same. If you draw a trend line correctly, you'll see the cluster of dojis, hammers over there. All right, you got your bearish engulfing, and everything else is clumped up together right around the resistance trend line, and that will give you an indication. If those patterns appear near a resistance trend line, it'll give you a stronger indication that the market is going to follow through. Okay, this is comparison with Fibonacci ratio, which is a completely different topic that is a little bit more advanced that we're going to talk about later on. But you can see that Fibonacci ratio also reacts to gravestone dojis, a couple of hanging mans over there, giving you an indication that this is the final rejection of price before it actually completely falls down. Okay, so I don't know if you guys have been trading since 2012, but in 2012 we have a shocker, which is the EU Summit 2012. A lot of people are caught off guard with this one here. But let me just give you a quick illustration. This is what happened in pretty much in about 2 or 3 days. This is what's happening in a week. This is on the Euro USD on the hourly time frame back in 2012. You'll start noticing morning stars here and bullish piercing before the market goes up, right? When the market goes up, you'll see a dark cloud cover over there. So candlestick patterns are everywhere. It just keeps appearing right, left and right. You get a dark cloud cover and you see the market going down. At the bottom there, you get your bullish piercing, giving you a quick indication the market's going to reverse up. You got your bearish engulfing. Okay, then you got your shooting star over here, and the market continues all the way down. And back here before the EU Summit results, what happened here is that market is a little bit confused because you see a lot of dojis over there, hammers and reverse hammers. I need to zoom in, otherwise you cannot look at it. So take a look at that. Those are a lot of dojis and reverse hammers there. And what happens next is shocking, because this is basically the EU Summit results. Greece is gonna exit the European Union, and that's basically what's shooting up. Okay. But when it shoots up within a couple of hours, this is 1 hour, 2 hours, 3 hours, less than half a day. At the very top, there's a bearish engulfing, there's a gap there, there's another dark cloud cover over there. It leads up to a complete reversal of where the market rallies up. So a lot of people are buying and got trapped over there, but if we use candlestick, and you'll start noticing the patterns here. People are actually selling off their positions, they're closing off their positions, they're starting to reverse their positions. And what happens next is obviously it's on a chart there. The market just crumbles and collapses on its own weight. So there you go. Okay, these candlesticks are everywhere. These patterns are everywhere to be seen. It's just that you need to be able to completely understand how to use it. You need to understand other indicators as well, other methodologies as well, or whether or not you can figure out what the fundamentals are. For example, we just have the CPI numbers. Let me just get a quick look of what that CPI number is as well. It's higher than expected, 0.6. If we go back to the chart, that's why you see a falling pound, because obviously that's good for the US, right? CPI is Consumer Price Index. We are going to talk about CPI tomorrow, as well as the non-farm payroll, GDP, and whatnot. So the basic understanding of the economics of a country. CPI is Consumer Price Index is basically your inflation number. So there's a higher inflation right now in America. The expected result was 0.5, a rise from 0.4. It hit 0.6 just now, which is news, just half an hour ago. And you got your core CPI numbers coming in at 0.3%. We have an increase of 0.1%. That's good news for the pound. Sorry, that's good news for the US. That's why you see the pound collapsing on its weight just now. That's why I got out up there. I don't want to hold a position to go long up there because I know news are going to come out. Expectation for inflation is going to come out. And there we go, guys. There's a lot of things involved in Forex. It's not just simply buying and selling blindfolded. Okay. Oh. All right. I think it's time for our Q&A. Just so you know, if you want to have the code or you've been waiting for the code is on the screen. It's a promo code for 100% deposit bonus for new signups. It's called beginner INT1. Okay, that's your 100% deposit bonus. So you deposit $100, you get 100% deposit bonus, which is $100 back to you as a tradable amount. Just to notify as well that OctaFX only works on its own official brand. That's why I keep mentioning that you need to go to OctaFX website or do it on the apps. Don't listen to people saying, oh, just deposit it through me and whatnot. That is not true. OctaFX only does deposit through OctaFX itself, either from the trading app or the website or the copy trading app. Okay, so keep that in mind. Okay, so let's open the room up for Q&A. I believe we're still going okay on the audio and visual. All right, Q&A, guys. Anything that you guys want to talk about regarding what we covered tonight, whether you want to know more about Candlestick, whether you want to know more about the platform itself, just let me know. We're going to cover that. It's been very quiet today. Okay, what is the difference between Islamic account and other type of account? I believe the Islamic account, I don't have an Islamic account, but I believe the Islamic account doesn't have a swap. I think that's the only difference. There's no swap, there's no overnight swap interest for Islamic accounts. Okay, I think that's the difference. All right, how do we search the trade? It has to be a buy or sell for the trade. Banu, as I mentioned, we need to pick up a little bit more skills before you can actually start, really figuring out the market there. But if you want a good start, then a candlestick is always a good start. For example, here right now we have a piercing, then this is obviously a drop there. This is on a 15-minute time frame. If I take a look at this from the hourly time frame and I put in all the other indicators that I have here, then obviously we know, because we've been gunning for 127.2 on the Telegram channel. Those that are following, I asked you guys to move the stop loss to 61.8 this morning, and price never got to 61.8, so you guys should still be safe, and this is still on track. Stochastic is crossover, momentum is to the downside. We're likely going to be seeing 127.2, 1.3650 very, very soon, so good luck on that, guys. All right, a lot of you are from Nigeria, so hello to Nigeria. What time is it in Nigeria? In the morning? OctaFX app on Android, there is no Candlestick. There is Candlestick. I definitely know. Not on the OctaFX app. You can download the MT4 app and then just log into the OctaFX server. I believe that would be better for charting as well. Easy way to understand the pip. Okay. Let's just open a position right now. Let's say, look at the difference here. 1.371415.8.9, right? The pip difference is back here. This is 14, this is 15. The difference there is fractional, the one up there. Let me just zoom in a little bit so you guys can see it. Okay, see the quote there? It's four decimal points, and then it's smaller one up there. That's a fractional pip. For every time it moves to a 10, it becomes 14 over here. It becomes a whole number. All right, so in this case, 13.6 versus 14.6, that means the pip is exactly at 1. Like this is 1. So if I sell, no, I don't actually want to sell right now, but okay, if I do a sell, Okay, and my volume is at 1. By the way, volume 0.01 is $1,000. Okay, 1 is 10,000. 10, I believe, is a million. Sorry, 10 is 100,000. No. 0.1 is 10,000. 0.1 is 10,000. All right, that's volume size. You want to keep this in mind. 0.1 is 10,000. 0.01 is $1,000. Okay, 1 is 10,000. Is actually 100,000. I believe that's what we call a standard lot. 10 is a million. So if you want to trade a mini lot or $10,000 position, that would be 0.1. Okay, if you want to trade a micro lot, it's 0.01. Okay, that's the volume there. The volume is basically your position size. Now let's say I do a I'm not going to do 0.01. I'm just going to do 0.1. I'm going to sell this by market. I just sold this. Okay, immediately there, for $1 a pip, my spread is basically cutting into that. Just now the spread was negative 1.4, so that's 1.4 pip in terms of spread. Right now the market is moving down. If the market goes to 1.3705, then it'll be 10 pip for me. I can definitely explain to you how to use the Fibo indicator, but it's just that we're not going to cover that in this session. This is purely for a beginner session. A Fibo session, we don't basically have the time for a Fibo session, by the way. But if you guys want to see it, it's basically there. We've covered this in Bahasa. We just haven't covered this in English, I believe. Okay. So that's basically that. If you take a look at the difference of price here, 1.7 and 1.79, I've got 90 cents there. That's basically your pip count there over there, and that's your spread. So I'm gonna close this. I don't like this position. I'm just gonna close it. I'm gonna stay out from this. Can we trade on mobile, same as laptop or desktop? Can we see chart on it with using indicators? I believe the MT4 application on Android and iOS, you can actually log into OctaFX server and you can use that as well. You can trade on mobile or on desktop using the same account, so that's not a problem. Oh, right. Yeah, which is what we're going to talk about. I completely forgot. Next is actually what is the best time for swing trader and intraday trader. It's not specific to Indians, okay? It's basically just to everyone right now. We're not talking about the time of when you want to trade and whatnot, but generally in terms of time scale, if you think yourself a scalper, then you want to be on a 1 minute, 5 minute time frame. That means you get in and out of a trade quickly. You look at the 5 minutes and 1 minute chart. If you are an intraday trader, normally you look at a 15 minutes chart and the hourly time frame. You don't typically go beyond the hourly time frame. If you want to have a position that's open during the morning and you want to close it by night, you want to look at the 15 minute charts up to an hourly chart. If you start looking at the hourly to the 4 hourly to the daily, then you would be categorized as a swing trader. If you start looking at just the daily, weekly, and the monthly, then you are a position trader. That means you're in there for the long run. And typically you have other investments such as maybe a call or put options on currencies that's going to have an expiry date in the future. Okay, so, but intraday traders, you're probably going to be on the 15 minutes on the 5 minutes and the 1 minute chart, because every single candles that you see here basically represents the time frame. For this one here on a 5 minute time frame, that means every single candle here represents the 5 minute period. Okay, in 5 minutes it drops from 1.3725 all the way down to 1.37. In 5 minutes it went up from 1.3703 to 1.3714. So that's about 10 pips within 5 minutes time period. If you go to 1 minute, then every candle that you see here, every new bar that you see here is a 1 minute period. Okay. So let's just go back here with nothing here. So that'll give you a better understanding of what's going on in the market here. Right, this is bar chart. If you want to take a closer look at the bar chart, look at the open, the close here. You can actually look at it. All you need to do is basically just add a rectangle here and it'll form a candlestick. Okay. I don't think I can do that there, but basically something like that, right? And if I switch to the candlestick, you'll see the body there. Okay. But that's the difference between a bar chart and a candlestick chart, as well as a line chart. A line chart is just a general direction. This is super useful if the market is very confusing. If you look at the candlestick chart here, like you move sideways here, it's a lot more obvious, more pronounced if you use a line chart. Okay, and on the difference of these time frames, by the way, what I want to get in is this: the smaller the time frame gets, the harder it is for you to predict where the market's going to go. Okay, so don't think that scalping or using the 1 minute time frame, 5 minute time frame to get in and out quickly is for beginners. It's actually not. It's the opposite. It's actually for advanced traders only. Beginners typically start with the hourly time frame or the daily time frame, and that's about it, because the shorter the time period, the more the faster the reaction time that you need to be able to have. You need to make a quick decision there, and there's just a lot of noise. For example, here, see this huge movement here on the 1 minute time frame? I'm just gonna draw a line. Okay, what do you think this looks like on the 5 minute time frame? Okay, just that. 15 minute time frame, just that. On the hourly time frame, it's just 2 bars. It means nothing. On the daily, it doesn't even exist. It's basically within the day. On the 4 hourly time frame, nothing either. So it's not that significant at all. If you take a look at this one, if I take a look at the hourly time frame, you know, if you take a look at this, you can draw maybe equidistant channel here. Let me just get a equidistant channel here. You know, I can draw a channel there and tell you right now, okay, right, this currency pair is within the channel here, so all good. Supports are respected, resistance has just been broken, you know, euro pound is there. But if I go into the 1 minute time frame, it means nothing. It looks horizontal line. It looks like a horizontal line to me. It means nothing, because on the 1 minute time frame itself, it has a completely different channel that actually goes up, right? So it means nothing. Those it's just way harder to be trading on a 1 minute time frame. So my word of advice, if you're just starting out and you think trading is something that you want to pick up seriously, I would stay away from the 1 minute and the 5 minute time frame. You don't want to be the scalper. To give you the analogy that I have is this: if you see a swimming pool with 100 sharks in it, how many times do you want to jump into that pool and test your luck? Okay, scalpers basically jump into that pool maybe 100 times a day. A swing trader maybe only jumps into that pool maybe once every 2 days or so. So I hope that gives you a good analogy on what trading is. Okay, because every single time you open a position, you are at risk of losing something. Okay, if you calculate it wrongly or you are doing it in a rush, it might give you a wrong perspective of the market. So the longer the time period, the general trend is much more pronounced. I mean, if you look at this one here, the 1 minute here, it looks like it's an uptrend, right? But the daily is obviously in a downtrend. You can see that the market is just moving down like that. So the longer the time frame, it will give you much more of the right direction of the market. The shorter time frame doesn't give you that direction. There's a lot of noise. We do have webinars to talk about how to filter all this noise out. Then that way you'll understand it a lot more. But for today, if you are a beginner, try to be more of an intraday trader or a swing trader. You can start with 15 minute time frame. That's completely fine, but I would say stick to the hourly time frame until you get used to all these different time frames. Don't jump around the time frames and start analyzing different time frames to use it to your advantage, because it's not going to work like that. It's a completely different beast out there if you are using multiple time frames. I would avoid the 1 minute time frame. I would avoid the 5 minute time frames unless you really want to be scalping. I mean, I'm not going to stop you, but if you're a beginner, don't. Okay, because even professionals don't even scalp. Typically, professional traders end up being a swing trader, not even an intraday trader, and that's basically that. it's just hard to scalp on the 1 minute time frame, the 5 minute time frame, to figure out what the market's going to do. 15 minute time frame is not recommended for beginners as well. I would really recommend the 1 minute, the 1 hour time frame. So this is not specific to the Indian market. It's not. It's global. It's basically how we think. It's a psychological thing. Your option is a scalper, which is trading the 1 minute, 5 minute time frame, getting 1.2 points out. Intraday trader, open a position in the morning, close it at night. That's fine. Intraday, within the day. Or swing trading, you can hold a position overnight, maybe a day or two, or up to a week, or maybe 2 weeks. Or you can be a position trader where you hold your position for months. You could be looking at 2 weeks, up to 3 months, 6 months. So Shikar, for beginner, which time frame to start? Stick with the hourly time frame. That's the best time frame to start. Let me give you an example. An hourly chart, as on a global scale, it'll look exactly the same, because everything, every hour is basically just the same, unless you live in weird regions like in Adelaide, where the time is GMT 0.30 minutes, really weird. But one candle on the hourly time frame is basically going to be looked at by a lot of traders worldwide as the same candle. Okay, so the patterns that appear are going to be the same globally as well. What is the difficult issues that we have if we take position trading? Well, you need to have a huge amount of capital, or manage your lot size correctly so that it doesn't burn your capital. You need to have a lot of stop. Okay, so this is how it works. If you are a scalper, I'm not going to talk about scalping here, because scalpers basically get in on the risk to reward ratio that's typically double the risk, 1 reward. Okay, so for every 10 pips, they are risking 20 pips to get in, because the market needs room to move, right? On the hourly time frame, on the daily time frame, you can start adjusting your risk to reward ratio. Basically, I'm risking 10 pips, for example, and I'm aiming for 20 pips. That's reasonable on the hourly time frame. Or on the daily time frame, if I start looking at the daily time frame, maybe I'm risking 50 pips. See that it starts getting bigger, but I'm gunning for 200 pips gain. Okay, so the longer the time frame, the stop loss that you have, the risk that you have to be willing to take, it's going to be a lot bigger, because you have to allow the market to move. If you don't let the market move, for example, take a look at this trade. Sorry, not trade, but take a look at this chart over here on the euro pound. Probably not the best example. Let's take a look at the pound. Okay, this is on the hourly time frame. If I want to go long, I look at this. I look at the time right now. I want to go long. Sure, I can go long, but where's my stop loss? Yeah, I didn't ask you, Siri, but thank you for answering. Okay, this is gonna be where my stop loss is because we have a double bottom there. This is on the pound. My stop loss is basically just going to be right around there. So if I buy here, let me just execute the trade here. So I just bought, and I want to put my stop loss here. I'm going to modify it. Okay, what is my take profit? If I zoom out, I might be aiming for that up there, and that's reasonable. I mean, I'm risking this much. I'm risking this much, okay, for this much gain. It's worth it, right? That's what we call about risk reward ratio. We're going to talk about this tomorrow when we talk about risk management. Okay, so we're going to cover this more, don't worry about that. But that's just to give you an illustration of what's going on there. Okay, so I'm going to close out this trade. Don't want to keep it. Okay, but that will give you a good understanding of risk reward ratio. All right, further questions? What would be the lot size should be taken for 700 to 1000 USD? Let's take 1000. My rule is always divided by 1000, so your lot size would be maybe 0.01. Max is 0.1. If all traders get profit, look, do you know the percentage there that you're talking about? Do you know how many percent is successful in trading? The number has gone up, but it's still, 70% are gonna lose out. Okay, but that's the case. In any case, if such a case happened where 100% traders get all the profit. The brokers lose their money, or they still make money by taking commissions and spread. Obviously, they take money from making commissions and spread. Depending on the broker, how the broker monetize it. Some of them are basically just monetizing on the spreads, which is not my place to answer for that. How do we use the promo Team Octa? If you can help out with that one there. We also have the Telegram group. If you deposit and join by Wednesday, so Wednesday by the end of the week, or by Friday, then I think you get into the Telegram. I don't know. You got the Telegram promotion as well. Can you explain how consumer price index affect the currency value and technical indicator? We are going to talk about CPI tomorrow, so we are going to discuss that tomorrow. So join me tomorrow. Don't forget. Tomorrow we're going to talk about fundamentals. We're going to talk about risk management. Okay, so that's tomorrow. Let's save it for tomorrow. Let's wrap it up for tonight. We're going to talk about that tomorrow. But CPI means the higher the inflation number is, it's basically the more expensive. Sorry, the growth of an economy is basically expanding. As I mentioned yesterday, I think I talked to someone in terms of whether or not to hold cash or whatever not. But I can guarantee you that if inflation goes up, your cash devalues once those inflation numbers goes up, right? I mean, if you compare what $100 50 years ago compared to now, $100 cannot buy you anything right now, not much. $100 50 years ago can make you, like, I don't know, super rich. All right, your yen drop. Someone profited from the outlook this morning. That's awesome. All right, looks like it's time. Yeah, it's about time. Let's wrap it up for tonight. We'll come back again tomorrow, so don't forget, tomorrow is the third part, the third session. We'll wrap it up tomorrow, but tomorrow we're going to talk about fundamental. We're going to talk about risk management, which is really important to get you started. Okay, like those questions just now, is this a bet? No, it's a calculated risk, and we can manage our position sizes, our risk. Let me just check on what we're going to be covering on tomorrow. So yeah, we're basically going to take a look at risk management. I've already talked about setting your stop losses and take profit. We're going to take a look at a more advanced one tomorrow. We're going to talk about drawdowns tomorrow. We're also going to talk about fundamental analysis. We're going to take a look at some of the economic calendars that happened, like the CPI numbers that just came out, 7:30 over here at GMT 07. It just came out about an hour ago. That is something that we need to monitor. We're going to start looking at trends, understanding trends, and we're going to take a look at the channels that I just drew, how to figure out how to draw a trend line and whatnot. Okay, chart patterns, simple chart patterns like triangles. We're going to add all that tomorrow. You know, we're going to take a look at further technical analysis, fundamental analysis, and risk management. So that's tomorrow. All right. So yeah, our webinar is close to the end, so I hope you guys enjoy it, and I look forward to seeing you tomorrow where we wrap things up. And again, if you missed out some of the parts here, we can watch the recording again, or you can watch the previous video yesterday. That's completely fine. It's on the OctaFX channel as well, so feel free to just keep on reviewing it until you get it, and make sure this is something that you want to do, or you can try it out, but go through the beginner's workshop. That's going to help out a lot. All right, looks like there's no further questions, so we can wrap it up for tonight. Thank you guys for attending. If you guys are watching this in the future, make sure that you watch the first one as well. Don't forget to click on subscribe and like the video, and also click on the notification bells so we can notify you on new webinars that's coming on. If we have a new video or a new webinar recording that came up on the channel, then you get notified as well. So click on subscribe, click on the bell notification icon, and click on like if you like it. Click on dislike if you don't like it. It's up to you. All right. All right. Thank you all. I'll see you guys again tomorrow. Stay safe, and good luck.